closed out 2 winners on the SPY. So 3 for 3 on the day, not too shabby. It was pretty close to my credit. In fact, one of them actually did hit full credit. I had already closed it out. I protected the trade. This one right here, 224 to 274. That was a 50-cent gain, so 22.3% return on capital. And then the 178 was a 270. This one actually did end up going to $3.30. And my initial take profit was 320. So had I left it alone, it would have actually hit my full take profit, which would have been great. But I protected a little bit early around the same time, 51.6%. Still, return on capital, I'm pretty happy with it and not too shabby. So SPY cooperated, which I was happy with. I'm still looking for the SPY to hit 565 tomorrow. I mean, if it doesn't do it today, no big deal, but I'm looking for it to at least tap that level tomorrow. That is right back down towards the recent low. Here's the SPY chart, and that trade can be deleted. This low for the week is 565.30. We came, again, within a little whisker of that. So lows today around 565.52. Lows from Wednesday, 565. I'm reading 565.27. Yep, 565.27. So if this low breaks, I mean, and we have non-farm tomorrow, so I don't know if that's enough to drive it lower, or if this is a test of the lows and then something that wants to push back up. Saw an interesting post from Seeking Alpha about ETF inflows, so I want to actually take a look at today while we're in session. Let's go to ETF inflows. There it is right there, inflows and outflows. Let's see what we have. So if I just enter into the SPY, anybody? Let's look at the last. Come on, man. Clearly there's got to be a SPY in here, right? SPY, high income ETF. There it is. Sheesh. All right, SPY. Let's go for the last. Couple of weeks. Let me see if I can shorten this up. So, do we have any outflows or inflows? Let's go to the middle of September to now, as we wrapped up Q4, and then what's this week look like so far? Let's see what we have. So today, getting some inflows versus. This is yesterday. So yesterday inflows, the first outflows, the 30th end of quarter outflows. I mean, the market's been excited since the Fed. So you're seeing some additional inflows into the SPY. We can take a look elsewhere, but net flows, just take a look at the chart here. Let's go to 100. So in yesterday, out, in, as we melted up to all-time highs. There's nothing overly disruptive to the market right now, outside of the tension that's going on in the Middle East and the escalated geopolitical tension, which may come into stocks. Maybe it's creating a lot of volatility in oil, that is for sure. But I don't know. This just seems like a little controlled pullback. Here's a really simple trade. If price is going to slowly, and maybe it stops going down. I mean, maybe this little high to low, it just starts to go right back to the highs again and we stall. Maybe we have a little bit of indecision that we can box in. But if all we do is we, just slowly work our way a little bit lower, come back down below the 50-period moving average. If I see it go below the 50, above the 50, I'm probably going to take a trade looking to see if we revisit highs. I mean, outside of this little hiccup that the market had from July to August, anytime we've had the 50 and 100 and the 50 and the 100, we've had a lot of support on the daily time frame. So, I mean, I said this this morning in my session with A1 Trading. We have support at the 50, at the 100, at the 200. We have a cushion of about 8 to 9% that would still keep this market healthy and bullish. Now, any dramatic damage below that, below the 200, taking out this August 5th low, that's not a good sign. Okay, because I think that would be doing some technical damage if we're making all of a sudden a lower low, which would be taking out months worth of recent highs. So that's something I'm watching. Do I think China will pull back tomorrow? Well, I mean, they pulled back today, so I'm curious to see what they get. I mean, HSI, pulled back today. Just look at some really common levels. I saw Lynette had left a comment in my YouTube channel asking the same thing. Do I really think? Are you sure China's like? Of course, I'm not sure. I don't know that China's going to guarantee to go higher. I just know that this has been a good run for me, and I'm trying to see if there's more to it. I've said this all week. I'd like to see bull flags, and so if we have this and a little bit of a pullback, I mean, if it consolidates for a moment, that's understandable. But if we have this like little pullback and then it starts to go higher again, I'm probably going to start taking some profit because as fun as this is to be on the winning side of a huge rally like this, I also know that these typically don't last as long as what they're showing. So if this goes up in 2 weeks and it goes up a little bit higher, like it could take a lot back in a couple weeks too. So if we get another push higher on these, this is kind of my China play right here. If we get another push higher and all these making higher highs, I will likely be trapping some profit on most of these. So, the HSI today, pulled back less than 236, less than 30. We've got a pretty long wick to the south right now. And I don't know if that's an indication if there's just plenty of buying that's still coming into the markets. Take a look at Alibaba. So we had a high yesterday, a gap lower, but we're trying to fill. I mean, there's room for a pullback. If this is a low to a high, we could pull back at least 23%, pull back 38%. This is a good spot to be looking for a bounce, I think. I mean, it's just a very common retracement level. So, I mean, if we hit the 30% and we go back to the highs, great. We go 382 or 50, go back to the highs, that's fine too. If we go any higher, probably going to start looking to take some profit. I'm not looking to be long term on this China stuff. Baidu, same type of thing. Hits the high, pulls back. There's a 23% pullback. We could pull back into the 30 to 38% zone. We have this 382 and 50 zone as well. I have some income plays. I'll continue to kind of take some stabs at them. But I'm good over the next like 30 days to basically assess like, do I need to keep taking these China trades or am I good? And I think if we go any higher, I think I'm good. Now, Alibaba, Baidu, I'm willing to hang on to those a little bit longer just based on the technicals. I would like to see these stocks continue to perform well. I mean, off of these major support lows around $80, I think this stock technically has all the upside in the world to get to 155 or 160. Now, we've also taken out a lot of previous highs with this rally and a lot of structure here with this rally. So even if this is a reversal pattern, any pullback, I'm looking to see, can we get back to where this thing started, which is about the halfway point. There's also a lot of support resistance right in here around 130. And that happens to be where I'm setting my covered calls on Baidu for right now. Okay. BILI. I'm not in this one, but looks like it's got the same influence as others. What's this one? Package software. Let me take a look at someone fundamentally. So earnings forecast to grow, trading 0.7% estimate of its fair value. So that means it's pretty close to fair market value with discounted cash flow. Earnings are growing like crazy, volatile share price, which realistically has just been, off the lows at $9 is up 3 times that. That's a pretty good gain, obviously. So there's a 260% rip that's pulled back about 50% as of late. I mean, if I was in this one, which I'm not, but if I was in this one, I would probably be looking along the lines of this high to low, something like that, or even dragging it to this lowest low. If we pulled back to a 30% zone or even a 23% zone, something like this. That shallow pullback level would be a nice target. If we get up to the 30 or 38% level, I would be moving stop losses and trapping some profit. So I would not want to sit. I mean, it'd be great if it goes all the way back up to $160, but that is super unlikely. So realistically, I think even if we get back to a push, a little bit of a pullback here, and then a push to the upside, getting back to where this thing all started around $40 or so, I'd be pretty happy with that with another $10 to $13 of upside. Okay. Question on the daily profit play indicator. I can learn. Yeah, so I actually I'll add a video to the classroom for the daily profit play. I was just going to do a live class on it, but I can add a video to that. I know that's for lifetime members. As far as futures, current positions, futures wise, I'm still long gold, silver, oil, And I do have some trades on ES and MES. So ES, MES, and MNQ and NQ. So futures on the S&P index, futures on the NASDAQ. So that's the NQ and MNQ. And then MES is micro. It's the micro S&P. I have crude light, so oil, and then I'm trading GC and SI. So those are my futures positions. I am on oil. I'm long right now, so I'm looking long on oil. Let me just put a little arrow here. So I'm long oil. ES, I'm basically hedged. I'll put it sideways. I'm hedged. Gold, I'm long. Copper, I'm long. And MES is a hedge. MES is a hedge. MNQ is a hedge. NQ is a hedge. Russell, I'm long. Silver, I'm long. Silver, I'm long. So that's all my futures exposure right now. And then the rest is stocks, some ownership, lots of options. Okay. All right. So, I mean, Billy, Sabrina, are you asking about BILY or BILI? I'm not in it, but if I looked at a target, I mean, I think $40 is pretty conservative, but it's also here's a I'm just strictly measuring the move. I don't own the stock. I'm not in the stock, so this is just what I see on the chart. If I take this move right here on BILI, which has been this low to high, if we are breaking this out like a double bottom, then that would be my measured move right there. So that measured move would be around $50. Now, conservatively, this first pullback level is $43.95. So if I painted in this $43 to $50 window, I would be happy with that getting hit as a profit target. So if we get to $43, trapping some profit into $50, I would be trailing the stops or protecting profit and willing to close out if I was in BILI. But like I said, I'm not. But that's what I look at if I was in the trade. Okay, for Alibaba and Baidu, they're similar. I'm doing the same type of measured moves. So Alibaba right here, I've got it marked on my chart. I'm trying to get Alibaba back towards 122 or higher. I do have some measured moves on this larger swing. So if I just take the high to low all the way down here, and we get back to a gap level between 148 and 160, that's a nice spot for some profit on Alibaba. If we did the same type of thing where it's not quite a double bottom, so I looked at symmetry. If we go low to high and low to high, that symmetry is sitting around 130. Okay, and if we go higher than that with a little bit more, rocket fuel, juice, whatever, a lot of momentum, then I'm looking to take it up here towards this 38% pullback, which is 158. So I'd say between 130 and 150, conservative take profit. If I'm willing to hold longer term, then maybe looking for some type of 5-wave move. So if this is wave 1, all this has been an agonizing wave 2, and this is all getting started for wave 3. If we have a wave 4 and a wave 5, if that's enough to happen in the next 3 months, 6 months, I'd be okay with that. But if this is aggressive and we're still in a wave 3, the biggest money is typically made in wave 3. Most people aren't spotting wave 1 because that's the bottom or the top. But in this case, if we have wave 1, all this correction was wave 2, and then wave 3 is ripping right now. I mean, I'm trying not to get in the way of it. And so if we have a little pullback here and then another push higher, call that wave 3, a little pause for wave 4, and then another push higher on wave 5. I'd be trapping profit, protecting profit on wave 5. Okay. So how long does it take? I have no clue. But if I can get some higher highs in the next 30 to 45 to 60 days, I'm probably protecting some profit. So I don't really want to hold a lot of these China plays past December of this year. I'm looking to see if, we've got China lifting animal spirits. We've got the Fed looking to accommodate with rate cuts. We want to see if the data is going to improve. So the Fed will continue to see inflation is good, employment is good, election, maybe it's an event, maybe it's a non-event. We kind of get through the Middle East tensions right now. Oil prices stabilize maybe in the low to mid 70s, but they don't get super volatile with day-to-day news like it is right now. It's pretty jumpy. And so if we can just kind of get through these next 30 to 45 days without crazy disruption, you've got earnings for the U.S. markets as well. We'll see if they're good. Are they beating, EPS? Are they beating revenue? We're going to have probably a bunch of buybacks coming in, maybe some splits, who knows? But if we just have a good common seasonality for October, November, December, I would look to see if the markets as a whole, not just U.S. markets, but even non-U.S. markets, can just kind of have this like low seasonal Q4 melt up. So if China's a part of that, great. But by the end of the year, I'm probably done with these China plays. If they're sitting at higher highs, I think I'm good. I don't necessarily want to carry them on to 2025. So do I still see the SPY get back to 565? It's still available. I mean, I see it possibly tapping that level, maybe late in the day. We still have 45 minutes, so that'd be a quick move to the downside. Or we sit right around there and maybe, gap because we have non-farm payroll tomorrow morning at 8:30. Maybe that's enough to get a reaction and actually open up around that 565 strike. So I mean, I do see it getting there. It's rare that I see those really obvious, open net positions and gamma levels that don't get touched. So yeah, I'm still there. But I mean, as I showed earlier, I did protect a profit. I mean, we came within about 45 cents of the strike today, and even I mean, it was yesterday, but the trade came within about 25 cents of it yesterday. So it's 2 different days. I mean, yesterday was like right out of the gates, 15 minutes of direction. Today was way more choppy. But the nice thing is this was a nice little run where the premiums that we had in our long options were actually paying out pretty nicely. So my $1.75 debit was paying up to about $3.30 right here at this low. So, had I been protecting it or just moving stop losses, I ended up grabbing this one for $2.70 profit. And then my $2.24 that I took earlier, right around the same level, I closed out for $2.70 or $2.75 and protected. So I was just monitoring that, but that was a nice little sell off around like noon to 1 o'clock today. And do I see it still getting there? Yeah, it's right there. I mean, a little bit lower on the day, maybe a late day move to find that strike. I've noticed that the levels keep in, the net position keeps increasing. The sell side certainly has a little bit more pressure to it, but yeah. And I mean, if you're gonna have to deal with non-farm tomorrow, so I know that's always a question mark of what does non-farm do. I have no idea. Is it going to be good or bad for the market? I don't know, but I would imagine that those strikes get hit. I mean, I've seen it happen over and over again for several years with that type of software. So, yeah, I mean, I still like the trade. All right. Actually, you know what? I do have a couple trades that I need to cancel here. I put this SPY trade in. So this one's trading for 70 cents. This is an expiration for tomorrow. I'm going to cancel this trade. And if I've got anyone with my Pulver alerts in the Discord channel for A1 trading, I am canceling this trade, that butterfly spread that I posted. Let me go into this was a stocks options trade. BA I averaged in, that was yesterday. Nike, NVIDIA, maybe it's index trades. Yeah, index trades. Okay, so this one that I posted on my index trades for the Pulver alerts, I'm going to update this one right now. I'm going to go ahead and say I'm going to update this and cancel it. So edit here, update. This trade did not fill as of Thursday. I don't want to be filled with opening bell activity Friday, so I'm canceling this trade. Okay, let me see if I can find a cancel. Oh, that doesn't work very well. See if I can find a little emoji here. I'll put that for my cancel. All right. And then I will edit this. Oops. Not edit, I just need to reply to it. So reply, update on 10 SPY trade. SPY 10-4, expiration, broken wing butterfly. This trade has not filled. I'm canceling the trade now to avoid getting filled with open bell activity Friday. during NFP. So no trade there, no big deal. But I need to go. I'm going to update these. I'm going to cancel these for all the other accounts. Just give me a moment to do that, please. So we're kind of sitting right in the middle. So cancel, cancel. All right, 3 more. What is this one here? 9072. They should have been closed out. Oh my gosh. You gotta be kidding me. $5.44. Well, since it expires tomorrow, I might as well give it a chance to see if it's going to go anywhere. Issue is on this one, so I got in for 962. Yeah, so it didn't give me that break. I got filled at 960 on the other ones. Son of a gun. All right, I need to check these really quickly. This one, I'm just gonna fudge. Let me see if anybody else is still open. Doggone it. That one's still open. Still open. Still open. So my 960 didn't get. Oh, you son of a bee. All right. So what ended up happening was this one filled for 960. This one filled for 960. I missed those others by 5 cents. What a turd. 960 there. All right. Well, it's not the end of the world, but I have a couple of these trades that I just need to get out of. So that one got filled. This one is still in. If I close it out right now, so we're sitting here at what's the SPY at? 566. I mean, we're basically right in the middle. I don't see the price going super high tomorrow, super low tomorrow. I'm just going to go ahead and take the small loss on it right now and just get out of the trade. So this one I will replace. See if I can get 545 for this and just work it down based on the mid price. Filled at 544, taking a small loss, no big deal. Okay, this one here, 5.44 and 43. Come on. Making me close at the bid price for crying out loud, 542. All right, 5.42. You sneaky son of a gun. I got to close it out the bid price. That's really disappointing. 541. All right. Make sure these are all closed. So closed, closed, closed. Break even on that one. So break even 1, 2, 3, 4, 5 break evens, and then 3 small losses. It's okay. But that expiration was tomorrow, so I needed to get rid of that trade anyway. I don't think non-farm is going to give us a bunch of volatility. I mean, volatility, but not necessarily direction is what I meant. So, all right. I'll put that aside right now. Keep an eye on things. XAUs, you want some gold? Yep, sure. RL, is that, what is RL? Ralph Lauren. I'm surprised it's doing this well, to be honest. How many stocks did you ask me yesterday? Like everyone that asked yesterday, everyone was asking me stocks with all-time highs. Here's another one. I mean, we're sitting here just off all-time highs on Ralph Lauren. I'm not interested in doing anything right now. I don't want to call the top. Okay, let's take a look at the fundamentals here. Let's go to RL. I mean, I guess the positive thing is if it's, the higher demographic or the wealthier demographic and they're still buying Ralph Lauren, it checks a lot of boxes, right? Unstable dividend track record, Okay, fine, but good value, earnings forecast to grow. Great, trading well below estimated value. So, I mean, there's upside potential here. I mean, price to earnings, not outrageous. Price to sales, not outrageous. Take a look at it versus peers. Another $130 to the upside is not too bad. Peer average 24.9, and it's sitting at 17.5 price to earnings. So there's room. Levi is a little bit frothy there. Columbia Sportswear kind of on peer average, but yeah, RL is decent. The only problem is I'm sitting here looking at it all-time highs, and I don't like it. So all I would do is this. If I have price that offers me something nice to buy or an option trade, then I'll trade an option around it. So is it optionable? Probably. So there we go. We have, looks like quarterly options, so I don't love that. Not that it's a bad thing. I mean, we have earnings on November 13th. I could always set a come to me type trade where if we come back down to 165 and 162, I don't mind this trade. 165 by 162, or I'm sorry, 165 by 160, and see if we come down to support level and get us filled. Now, the way to test and see what this fill would be is if I did like a 195 by 190. Right now, this is offering about $2.30 for a trade that's basically in the money. So if I did the 160 by 165, I would be asking for the broker to fill me around $2.20 or $2.25. And then that means that price would have to do this. Price on RL would have to come down to here, right in between the 160 and 165. If it does that, and I get filled at 225, I think that's a great support level to look for a line in the sand, and that's a good trade. So do I like it? Yeah, I like it. Lows around 157. Really strong support. If I get filled at 165 by 160, I like that trade. And if I'm wrong, I take a small loss in the credit spread. So I'm going to take the trade. It's not going to fill. It's going to be pending right now. But if price works its way down towards my strike prices and I get filled at 225, I do like the trade. So I'm going to take the trade right here. This is RL. Thanks to Francois for throwing it out there. I'm just not doing anything at the highs. I'm not putting in bear call spreads. I'm not shorting stock. I'm going to wait for a dip or a pullback. And on that chart, I'm not looking to do it aggressively. I just think if we pull back to support, let's see if we can get back to support. So, all right, 225 on a credit spread on RL. This is going to be out to November 15th, which will be right after earnings. So we have earnings, and I'll give it a chance to play that. I mean, I suppose what I could do instead of going out to November, I don't know. That's probably not gonna get filled. But if we go out to January, there's a chance we could get filled if we come back to 165. I did this. I don't even have a bid ask price yet, so let me see this loads up. So if I did the 165 and 160 for January, do 225 here, I'm gonna put in both trades. So I'll do a November 15th expiration and a January 17th expiration, try to get filled for 225. Okay, now let me see what this does for each trade. So if I go review and send 225, I don't want that. I want to make sure I get filled 225 on each trade. So this should be $4.50. But anyway, I think I'm just going to do one at a time. So clear this out, go to the November 15th for the first trade, 165 by 160, put in the 225 credit, and I'll put this in everywhere. Oops, not replace. I just need to go similar. There we go. So throw these in. Okay, a couple more. There we go. And last one. Perfect. Okay, I'm going to do the same thing for the next expiration, which is January. I'll still put a 165 by 160 for $2.25 and do the exact same trade. So different expiration, but the same strike prices, 165 by 160. And try that one. So that's January, similar. There we go. And I'll throw this in my Pulver Alert section for A1 Trading Discord. So let me get these finished up here, and I'll get an image to that. So a couple more accounts here. There we go. And last one. Okay, so getting an update right here. RL 11/15 expiration, 165 by 160 bull put spread, 2.25 credit pending. And then the 1/17/25 expiration, 165 by 160 bull put spread, 2.25 credit pending. All accounts, nice support lows. Okay, trades in. Yeah, I mean, I like it. Fundamentally, it's great. I don't love the retail sector, to be honest, but if this is, season's greetings, happy holidays, buy Ralph Lauren for Christmas, then, maybe Q1 of next year looks pretty good, but I'd like to see a pullback, and I'm just trying to get my levels to buy low enough or get filled on an option trade low enough where if this just bounces around, that we can time this where we don't violate these lows and we get paid on the trade. Okay. Francois says, you can buy me an RL golf shirt if you make money. Oh, yeah, that's fair. That's fair. Okay. What is your take for Oxy? Let's see here. Ann says, do you think SPY's going up tomorrow? I don't know. Look at the week. Has the SPY done anything this week? Not really. Outside of, Monday's close where we went down and all the way back up, and then Tuesday's open, price has gone virtually nowhere. So, tomorrow, if there's a directional play tomorrow, it looks like it's trying to lean, breaking some fresh lows and trying to fill the FOMC gap. If we don't have a directional day, this thing just stays in no man's land, and we don't break new highs, we don't break new lows, and this is just a choppy couple of weeks. So I don't know. CVS, I saw some news on CVS today. We'll take a look at that one. Are they talking about separating the company, somehow splitting CVS into separate entities? I had to take a phone call, didn't hear an answer on what to do if we didn't fill on the close of the 565. Where's it at? If you did the SPY today, so SPY today, come on, charts, for tomorrow's expiration. So my first trade is upside down about 20 cents, and my second trade is actually profitable by 60 cents. So it is completely your call whether you want to stay in the trade or not. I'm out of the trade. If you're still in the trade, would you be? If you're uncomfortable with the risk tomorrow because it's non-farm, and what if it goes up? The sensitivity of that option tomorrow, if price goes up, these values are going to deteriorate very, very quickly. So if you are in at the 225 or 220 or 215 debit or 210 debit, a break even or just a few cents off is totally fine, just to chalk it up and say, it's a break even trade or lose a couple bucks. The other trade, if you took it with me at the $1.70 point, that one's up about 70 cents around 70 cents. Like, we've got a winner there, we got a break even there, and then you have no worries going into tomorrow's non-farm payroll. It doesn't matter what happens. So if I'm in the trade right now and I still had the trades running today, I might just close it and just take trade one would be down 20 cents, trade two's up 70 cents. I would just take the profit or take the small loss and don't worry about it. There's always going to be another trade for us to take. But I don't know what tomorrow is going to give us. I don't know if it's going to be an up day or down day. So if you take the small loss or take the small win, you can't come back and say tomorrow, oh, I should have held it. If you're going to hold it, then hold it. But the fact that price cooperated today to the downside, and it didn't hit the price. I get it. Like I wanted it to hit 565, but we had a decent profit opportunity there and a decent profit opportunity there. You had about 20 to 25 minutes to look at closing the trade. If you didn't, you're still break even or upside down a couple of cents, 10, 20 cents, or you're positive 50 to 70 cents. It's okay. But if you're worried that whatever happens tomorrow, it doesn't hit the strike price. I mean, it should hit the strike price. If it goes up tomorrow, it's going to ruin the values that we see right now. So if you're okay with it, not worrying about non-farm tomorrow, then good. Don't worry about it tomorrow. I have no idea what non-farm is going to do. Is it going to be a beat of 144,000 jobs? Is the unemployment rate going to go down and get the market all excited? Inflows like we saw yesterday, are we having inflows today on ETFs and it's going to rip higher to retest highs again? Maybe. I don't know. So that's you. That's you managing the risk. Okay. All right. And then where do you see those trades? I'm going to post that trade here. That's going to be under stock options for, this will be a new one here for RL. I'm going to post that it's under the A1 Discord. Under Chris's trades, I'm going to put it in the stocks and options position. So let me edit this one here. And that's RL. What were the expirations on that? Let me just take a look at RL. November 15th and January 17th. So I have 11, 15 expiration, sell the 165 put, buy the 160 put, 2.25 credit, and RL 117.25 expiration, sell the 165 put, buy the 160 put, 2.25 credit. So 2 trades, staggered expirations, looking to see if RL will fall to support area for this fill and offer the line in the sand for support to hold and generate some income. So that's a $225 per contract profit, $275 per contract risk, and I'm good with that. So I'll take a screenshot of RL and post that. That's right there in that. So right in here, get rid of these guys really quickly and see if we can get a bounce off this area. So I'll put in a long position from that 165, which is right in here. So anything to the upside is fine. And then anything below 160 would be where the risk comes in. So 165. Good enough. So that's a 165 sell put, 160 buy put, 2.25 credit. And then I'm going with the 11, 15 expiration and 117 expiration. That's the trade. So screenshot and get this officially posted in the A1 Trading Discord. So there it is. Oh, come on now. Okay, and it doesn't want to post a screenshot for some reason. There we go. All right, that trade's good. All good on that. Okay, Mark says CVS is talking about splitting between insurance and pharmacy business. Yeah, that's what I thought. It was just entities. It's probably not a bad thing. I'm actually wondering. So CVS, you got CVS Health Corp, and we're trading at 62.93. The market seems to like it a little bit. I mean, let me take a look at. Let's go to CVS versus Walgreens. So debt's not well covered, good company value, pays reliable dividend, earnings grew, forecast to grow, trading well below estimated value. This does cloud the future though. I mean, these price to earnings are great, price to sales are great. Those are super undervalued. Discounted cash flow model talking about 400% upside, which is ridiculous. The only problem is if they separate, I don't know which one gets the growth and which one doesn't. So I think if you were to take trades on CVS now and they go ahead and proceed with the split, are you going to have fractional option trades or fractional ownership because it's CVS Insurance, CVS Healthcare? I don't know what that's going to look like. So realistically, I think to be safe, I mean, you'd almost have to just buy the shares as opposed to trade options, because options could be like messy and they don't know where to put it. They could be like fractional, like I don't know. I think it'd be really disruptive. So I look at this valuation. I think that's pretty solid. Technically, we take a look at the higher time frame. I know CVS made some headlines today. I mean, it seems to be a pretty good support level, but which one is more important? Is healthcare? I would imagine healthcare is probably going to be the better of the two, but insurance has been like the hottest thing ever in the last couple of years. Look at Progressive, look at Geico. Who's paying higher premiums for their insurance? Who has healthcare? Everybody. So I don't know. I mean, I think that they do stuff like this for it's a synergy. It's a synergy to look to have each entity focus on what they do best, improve their margins, and then collectively, if there is a parent company, then overall they can still do pretty well. So this has happened a lot. I mean, GE did it with like GE, aerospace versus healthcare, and there's spinoffs and all sorts of things where they will split divisions. So anyway, I like the trade, but I don't really know what I want to do with it right now. Outside of, I see that it's good, but why does this stock so terrible right now? Why is it down 43%? And coming back from, I mean, this is back into like 08, 09 levels. So, I mean, we're as low as we were back in 19 and 2020. So even though it's had a big rip like everything did back in 2020, 2021, it's given it all back. So I don't know. I mean, of course I say that, and I'm in here with stupid Walgreens and still getting smoked on Walgreens. If I look at this as a trade, Walgreens right here, dividend is not well covered because that's a monster dividend. Debt not well covered by operating cash flow. I get it. There's some problems. Earnings forecast to grow, trading well below estimated value. We're sitting at $8 and change with virtually nothing on price to sales and negative price to earnings. But fair value is a $25 position. I own the shares at like 14. So am I holding out for like this huge gain? No, but I think if we have a squeeze back to $14, $15, I'm willing just to get the heck out of it. So I'm using options, kind of lower my cost basis a little bit, but it sucks. I mean, I have some dividends, that's great, but I'm $6 upside down on the position, and I don't love that. So anyway, yeah. If I had to pick between the two, I think CVS looks better. I just don't know what to trade with the split. If and when they split, I don't know what that looks like from an option standpoint versus having shares. Let's say that I bought 100 shares right now of CVS. Well, if it splits, do I get 50-50? And all of a sudden I can't control options anymore without having to buy more shares. So I don't really want to do that, So anyway, but I would like to keep an eye on CVS. And as of right now, if I put in just some simple moving averages, is there any reason to be bullish right now? Not really. Not according to this. Not according to this. We haven't broken this trend line out. This might just take time to base. And so let's say that we, fill this gap and we go up and down and up and down. I mean, if this base is over here, then sure, we can round out a low, start working our way back up into range levels. But maybe that's better on the right-hand side of the trend line versus trying to call it now. So just my thoughts. But yeah, good stuff. See, you love the daily profit play. Ran it 3 times today to pocket $700. My biggest day so far. 2 thumbs up. Good stuff. I wish I could in the chat, like, put some confetti or do like a little, celebration whistle. I need like a soundboard that I can push and have the audience go wild. That's great. That's so great. So excellent stuff, man. Thanks for sharing. That's great. $700, single day trading. No big deal. No big deal. Good stuff. All right. What else? Take a look top down really quickly. Somebody asked about gold earlier. Markets for today, SPY's down 0.37%, Q's down 0.31%, Dow is down 0.64, Russell down almost 1%. Volatility is back up a little bit. The VIX is up to 20.66, making some fresh highs for the week. Non-farm payroll, good or bad tomorrow, could be a move of volatility increasing or fading once again. I don't know. I don't think we're gonna have a volatility event that gets us up here anytime soon without like something crazy happening. But if we have a miss and the market starts to sell off, volatility can certainly escalate. But if we have a good move and the market wants to rip, well, we come right back down. So I don't like where volatility is at right now. Outside of I'm not doing anything. I don't think we have necessarily risk off tones yet. No structures breaking. The market is still sitting here very sideways for the last couple of weeks. I mean, we had, this is FOMC right here. We had our CPI flipperoo. We had the Fed obviously cut rates. So we had CPI data there. We had FOMC here. And this market is just hanging in there with like that type of look. Now, look at how this is behaving. If all we see is this like slow grind to the downside, that is a good support zone. And this is a good support zone. And if these levels bounce, I would be looking for opportunities to then, look at a 3 to 5% correction and see if that's enough to buy a dip. I look at the 50 period, the 100 period, the 200 period. I like those levels. I think they're just really straightforward mechanical ways to get involved with some participation. There we go. Imaginary confetti. Robsy's got it. You're after it, man. Thanks. Okay. So that's where we're at on the S&P. Volatility's up. We'll see what it's going to do tomorrow. SVXY, I'm still holding some longs on SVXY. The dollar has had a nice rip here the last couple of days. Let me switch workspaces. If I go to the DXY, this is a solid 4 days of green on the dollar. Today's currency strength chart. Dollar is at the top of the food chain. Pound is not. We had some risk-off flows on the day. Markets didn't really reflect that too much. Dollar strength, but Aussie, New Zealand weaker. Also, China had its first pullback in about 2 weeks. So I could see, a little bit of the Aussie, New Zealand struggling. I think I took a trade. Let me see if this one actually hit profit. I took a trade on the Aussie, New Zealand. Aussie, New Zealand. Okay, so I'm up some profit right here. I got in at 109.46. Currently up around 50. I'm going to go break even on this trade. All right, so if you're in my Aussie, New Zealand, I eliminated the risk on that trade. That's also in my alert section. So DXY, let's go back to this chart. I'm going to move this over to my Forex trades. Aussie, New Zealand was one I just took. Go down to that one here, Aussie, New Zealand, update, edit message, update, 10/3 at 3:49 p.m. Eastern time, moving stop loss to break even. Currently up around, we're currently like plus 70 on the trade. So I think what I'm going to do is I'm going to lock in, let me lock in like 50 pips. So right here, let me see if I can move this up. So let me just move it to, I'm going to lock in 50 pips. There. All right, so I'm locking in 50. I'm going to see if that goes any higher. So I'll update that message again. Edit. Moving stop loss to plus 50. Currently plus 70. So risk-free, and hopefully price continues to profit target. So that one's going to get locked in for some profit, especially on the Aussie, New Zealand. That's not super volatile. All right, I'm just updating the Discord right here. The 1.0943 buy. Stop loss moved to 1.1000 to lock in 50 57 pips. Risk-free. Lock in some profits. And let's see if price will continue higher to hit the profit target. Okay. Updated. Dollar index. I'm looking to fade the dollar. I keep talking about that. I don't know if this is going to be, up and then a little bit of a pullback for non-farm, and then we go up one more time, come back into all the structure here in the middle around 103 to 103.50. Is that enough to get the dollar to turn harder for a Q4 rally in the markets? Would be a Q4 drop in the dollar, possibly. If I were to, look at the Q4 markets going higher, I would imagine that the dollar is not going to be higher with it. Usually it's going to be the opposite. So if we have a bit more follow through on the dollar, does that drag the markets down a little bit for an October dip? Sure. But if this level is satisfied in the dollar and then all of a sudden the markets pivot hard to go north again, I think the dollar takes a beating to the downside once again. And I kind of hope that it does, because that would be great for, all the other assets that would gain for a dollar weaker move. Is /BTC at a buyable level? You're talking about Bitcoin futures. Let me take a look. No, not in my opinion. If I'm holding out for futures, I probably won't just buy the futures contract there, Stan. I'd rather use an options contract. So if Bitcoin futures comes back down to this low, then I'm probably going to put in a credit spread. I'd look at we can take a look at the options chain here. I'm curious what the strike prices are. So if I go /BTC, the only issue is we don't have a lot of expirations to work with. This is certainly a less liquid futures instrument than others. But if I were to say, look, by December 27th, okay, right now these spreads are 100 points wide. No, 1,000 points wide. Okay, there's a lot of risk here. So we're trading at 61,165. So I could have a trade that if we're above this price by December 27th, I can make $2,750. Now, that's not the trade that I want to take, but I want to look at this for an at-the-money position, because I like that I can get more profit on this one than I can on the loss if I get a 550 fill. Now, what I should do is do like a 500 fill, and that'd be $2,500 risk, $2,500 reward. And I wouldn't mind saying that by December 27th, we're above 50 grand. So I'll actually take the trade if I can put it pending. Now I don't know, and I might have to take the loss on this, but if I put in a trade here where I put in a sell at 50,000 and I put in a buy at 49,000 and I get filled for a $500 credit, that's a $2,500 reward with a $2,500 risk. But my line in the sand is that 50K mark. So, is it out far enough? I don't know. I honestly, if this was if I could go out to, let's say Q1 of next year, I like the trade a little bit more. It's not a bad trade. It's not a bad trade, but let me see if I can do this. If I go to 50K, so if I buy the 50, sell the 49, or I'm sorry, sell the 50, buy the 49, this wick low was 49 right there. So we'd have to basically come back and test that low for that trade to get filled. Now, what I could probably do is put this trade in for like 525. And that should give me just over $2,500 in profit. 26.25 profit for a 23.75 risk. I don't mind that trade. Okay. But two things have to happen. Price is going to have to fall down to these levels. And there's a chance that price doesn't fall enough to fill that price, and I don't get the trade. But that's probably the only way I'd be comfortable taking the trade, is putting in as a credit spread. If I get filled, it's income, and that's good income. Obviously, if I get the trade filled and by the end of the year I'm up $2,600, that's pretty good. But obviously, I'm willing to take the risk at $2,300. So I'll take the trade. Let me throw this in. I'm going to put this on my margin accounts here. Just it's a little bit more buying power. This one takes up $6,800 in buying power. Before I do that, that's a little rich. I mean, it's still defined risk, so it's not a huge deal, but that's a lot of buying power just for one option trade. So I'd like to see these numbers fill in. So there's two things. I don't know if this is going to change much with BTC. Now I could go to MBT, which is micro Bitcoin, but this is even less liquid. Let me look at the same trade for micros here. And that's the only expiration I have. And now I can go, oh my gosh, $5,000 spread. So if I sell this one, buy this one, what do we have for the at the money? So we're trading at 61. I could get 28.5. If I went 2,500, that's not too bad. I think I'll take that trade. Again, I don't know if I'm going to get filled on the trade. So if I did 2,500 credit, then if I'm right, I get $250. If I'm wrong, I lose $250. Now it says expiration cycle is closing only. These are all expirations. So the Bitcoin future stuff is showing to be like super illiquid. Like my broker Tasty, which usually lets you trade everything, this is showing that the expiration cycle is closing only. So I can't do anything with it. So I can't even take this trade. So if I can't trade MBT, which is way more cost effective for me as far as risk, I'd have to go to the /BTC. And I don't know. I want to see like more strikes. I think it's silly to have to take on a $5,000 wide spread or a $1,000 wide spread. So to answer your question, do I see it's buyable right now? No. I'm not touching Bitcoin futures, but if it comes down to an attractive price, I do like it. Unfortunately, we just don't have contracts through the end of the year. So I'd like to go out a little bit farther. That's all. All right. Anything else? Currency strength chart, dollar, keep an eye on it. We've got some non-farm action tomorrow. We'll see what happens. This is the SPX, SPY. It's been a pretty quiet couple of weeks after we had that big FOMC rip to the upside. We're now looking at two small weeks of trading. Did it just stop loss order mod? Okay, I just want to see if it got stopped out or not. Did not. Okay, good. And let's take a look at oil, gold, silver. So oil, switch to the workspace here. Oil, ooh, that's looking way better. My CL positions are certainly looking better now. I'm not that excited to hang on to oil longer term. I've got a November expiration here. I'm only upside down about $85. But if this starts to pay, I think my max profit here, let me see. If I put in a CL trade, so I collected, so my max loss is $2,000 if I'm dead wrong. My max profit shows 38,000 because I have a hedge on with a long $55 put, which I will likely not have profit on. So right now, P&L year to date is 85. P&L opens negative 330. If I can get this thing to pay me, I don't know, let's say $250, $500 an account, I'll probably just take the profit on CL and walk away and just kind of get rid of all the Middle East exposure stuff. But I think it makes sense for oil to go up. I'm not trying to be a contrarian, but I'm not that interested in trying to fight Saudi Arabia, trying to drive prices lower either. So there's a little bit of risk on the trade for me. I've got about $2,000 risk on the trade. But if I'm able to grab, 10% of that, 15, 20% of that for a profit and do that sooner than later, then that's fine. And I'm curious if oil ends up getting, up into the mid 70s. Closing bell just struck. So if we get up into the mid 70s, what does that CL position look like? And I'll assess from there. So we'll see. I just don't want to see oil prices keep pestering these lows because all it takes is one nasty push and one break. BITO alternative. Yeah, I'm already in BITO though, a ton. I've got BITO naked puts and ratio spreads and credit spreads. So I like it, but I'm just like IBIT, BITO, Bitcoin. I like Bitcoin in general. I just want to trade. I'm in MicroStrategy as well. So that's how I'm kind of trading my Bitcoin with my stocks and options portfolios between those instruments. Yep. All right. TradingView is your main platform. I mean, for my charts, yeah. I have a premium service. I think I'm in the Pro version or Pro Plus version. What is my member? I think I've got the Pro Plus version. And then I also bought tick data for futures and real-time data. So whatever that costs me per year, I think it's like $400 to $500 a year plus the data feed, so maybe $600 or $700 a year for TradingView. But I do have an affiliate code for TradingView as well, if anybody's interested in my Discord. But all right, so here's where we're at for the day. Price on the day, pretty jumpy. I still like the 565. I might end up taking this trade tomorrow or Monday. We'll take a look at it tomorrow morning during the daily profit play if I still like it. I'm going to watch and see what the strike prices are. We also have non-farm payroll coming at 8:30 a.m., so before opening bell, and I want to see what this does to the futures market. Futures today pretty much accomplished nothing. So we were choppy all day in futures, and then tomorrow non-farm, do we get above the VWAP? Do we push back down? We're below it all week. So if I mean, I think we're vulnerable to the downside, but nobody knows. So I will look to see if I have an attractive gamma squeeze level tomorrow. If I do, maybe we'll take a short-term trade. Could be a Friday or Monday. Mondays are usually directionless, and so I'm a little hesitant to like pay for all the premium over the weekend. I'd rather just take the trade on Monday. Okay, can you explain the last 10 minutes of crazies? It's just late. It's always, I mean, look at the volume. Look, if I go to SPY and I bring up a volume indicator, let me add a study here. Where's my volume? Watch. You're typically always going to see an uptick in volume at the end of the day. So there's just a lot of transactions at the close, stuff happening, right before the close, and then behind the close, it's like all sorts of crap happens that you and I can't trade. So I mean, some brokers allow you to trade through like extended hours. You can trade till like 4:30 or 5 o'clock, and then you can trade at 8 p.m. or 10 p.m. or trade pre-market around 7 a.m. Just depends on your broker. But there's always a lot of short-term price action, very quick market maker garbage happening in the last 5, 10, 15 minutes of the day. So that is also why I don't like to be in trades if I'm if I'm directional. I don't like to be in trades if I don't have to be. If I had profit earlier in the day, I'd like to protect it because that type of movement is highly sensitive to those price movements will destroy or obviously help your option trades. But usually, if you find yourself on the wrong side of it, it's not good. So what I'd like to see, let me get rid of this volume indicator now. I don't need it. Okay, what I'd like to see tomorrow with this little pop-up is, we pop up here. Maybe we fade again off of tomorrow's highs, and then we still find a gamma squeeze level we can go after. But if we have non-farm payroll in the morning and it disappoints, the market might gap lower and sit right here, and then we'll all be sitting here wondering like, oh, I knew I should have hung on to that 565. Well, if you did, you did. If you didn't, you didn't. I'm out of the trade, and I got out right here, 35-40 cents away from my strike price, and I'm happy with that, and I don't care. Like, whatever happens tomorrow, it's a new day. It's a clean slate. We'll get into daily profit play if we like it, and off we go. Okay. All right. So, I think that's it for me. I'll let you go for today. Happy Thursday. Thanks for being with me. I am working on a couple things in the background. I talked about this with the team at Prosperity Pub. So I'm putting together a very inexpensive course that I think is going to be a good kind of gateway into a lot of things that I do. I mean, I think in my role, if I can get a lot of traders that can understand when I talk about the stock market, talk about options trading, talk about a handful of core strategies, I think that's really important that you know what I'm talking about. And if I can help you learn faster, give you some core things. I'm trying to do something that's, maybe like $25 to $50 and try to get thousands of people to sign up for it. I'd be really happy with that. And then it helps a lot of traders. And then we have all sorts of, services and other things that I can help and trade alerts and signals, and just makes it all easier to understand where it's not, I don't even know what this guy's talking about with a butterfly spread or brokering butterfly or blah, 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 this. Strategies have silly names, but if you know what you're doing, and all it really is if you want to see this happen in the market, then you can do this. That's my favorite thing about trading options. So think about this. The market is essentially a canvas, and you can do whatever you want, right? So if price goes up and you want to get paid for price going up, you can do a handful of things to show that. If you think price is going down, you want to express that, you can do a handful of things to show that. So I have my preferences. There's strategies that I like and I dislike. I stick to what I know. I stick to what I'm pretty good at and confident with. But anyway, if I could get something like that in your hands, perhaps that would be useful. And not looking to charge a ton, but it's something I want to be able to say like, this is kind of a flagship thing for me to do. get as many people on board as possible, and then easy to service a lot of other services and alerts when you'll all understand the core of what I'm doing. So yeah, that'd be something I'm hopefully going to have done maybe in the next maybe 2 to 4 weeks. So I'll work on that. Okay. Janine, no, I'm using dynamic trends with Quote Media. They do have a plugin with TradeStation. They do have a plugin with Tradier as well for their brokerages. The reason I use Quote Media is because that is the big price feed, and so I don't have to have my broker connected to it. So I don't trade through TradeStation. I trade through Tasty Trade, and I have a Thinkorswim account, and I have a Schwab account. And so I just use their Quote Media package, which is their live tick data. So my gamma squeeze levels, if you have those, if you're subscribing to Dynamic Trends, awesome. But if you have them plugged into your broker platform, they do have a TradeStation feed as well as Tradier. And I also think that they're working on Thinkorswim. They might have Thinkorswim or with Schwab right now. So they do have a couple of broker connections where you can trade directly from the Dynamic Trends platform. You can build your option strategies and trade. But just the overall day-to-day, gamma squeeze levels that I look at, that's with the Quote Media package. Yep. Okay, very cool. All right, everybody. I'll let you go for today. Happy Thursday. And thanks for being here. If you'd kindly hit the thumbs up button if you're watching on YouTube, like the video, all the good stuff. Comments help. I try to jump in and check the analytics, read the comments. So, if you ask me a question, I'll answer. And thanks for being here. Tomorrow morning, I'll be live at 9 a.m. for the daily profit play. This will be right after non-farm payroll. And then I'll be live with A1 Trading at 10:15. And then we'll wrap it up back here at 3 o'clock. I also have a webinar tomorrow. If anybody keeps hearing me talk about this daily profit play or this $100 challenge, if you're interested in doing a webinar with me tomorrow, I have a webinar at 12 p.m. Eastern time. I will share the link in my Discord and I'll post that in my Telegram as well. So if you want to just go through a webinar with me, it'll be like an hour and 5 minutes. But I'll show you the gist of what we're doing. And the feedback's been fantastic. I mean, I had a member email me today and say, I just joined this week. I just paid for the service. So we had a member here talked about making it just today for $700 on the day. It's like, yeah, this is awesome. So it's good stuff. All right, sounds good. TradeStation and Tasty, it's up to you. I mean, I think the best thing you have to do with choosing a broker is what's your bottom line. I'm an active trader. I'm probably logging anywhere between 3,000 to 5,000 trades a year. So I want really good commissions, low commissions. Tasty, the reason I like them is my commissions are low and they only charge entry commissions. If I buy a stock or buy an ETF, if I even buy crypto through Tasty, there's no commission. So I trade for options. I pay an entry only commission, no exit. If I trade futures, it's about the same. Futures is like the only thing contract wise they don't really improve, and that's pretty much across the board because that's a different clearinghouse. So that's your CME or CBOE, and they're going to charge like a pretty fixed commission on that. But when it comes to options, I mean, there's some flexibility. But I like Tasty because it's an awesome platform to use. It's super easy to navigate. It's intuitive. I think they got all the bells and whistles of a Thinkorswim. I mean, it was the creators. Everybody should know this, but Tom Sosnoff, Scott Sheridan, that are at Tasty Trade now, they built Thinkorswim's platform and sold it to sold it to TD for $1 billion. So what did they do afterwards? They built Tasty Trade to make it better, sleeker, faster, and I mean, it's a good platform. I use it almost every day. Well, I do use it every day. What are you talking about? Anyway, all right, I got